What's going on, everyone? My name is Nicholas Merton here from dYdX, and today is December 30th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we have got an imperative update to discuss when it comes to Bitcoin, altcoins, and the broader market. We are expecting a major collapse over the next 2 weeks as Bitcoin is starting to showcase not only really worrying signs with its price action, but we are obviously seeing altcoins follow as well, and even macro recessionary indicators starting to flare up in a significant way. So I want to spend some time to break down all of this. I want to talk about the fundamentals, the inflows and outflows, the price analysis. Grab a cup of coffee. Stick with me here, guys. If you enjoyed the video, consider dropping a like, and let's go ahead and kick things off. So I want to start here by talking a little bit about what's going on within Bitcoin's price, because this really, out of all things, is probably the biggest concerning element for me because of the weight Bitcoin holds and the performance of all altcoins and crypto as a whole. Essentially, since our recent all-time high back here on December 17th at around $108,000, we've pulled back down to around $93,500. Now, while this isn't obviously the end of the world here from a correction perspective, we've seen much worse. The thing we need to prepare ourselves for is what's coming next. And price action is starting to showcase some really worrying signs. There are two primary things I want to talk about here: the moving averages, and I also want to talk about the line of prior resistance that hopefully can turn into new support. That's what the bulls should be hoping for here. We need buyers to show up at this level if we are to sustain a longer term uptrend before facing some significant correction. So first off, let's talk about the moving averages, and we'll come to that line. The moving averages, the 21-day moving averages, which were a perfect buy the dip opportunity at every small pullback since back here in October, since we really kicked off this trend from around $60,000 all the way up here towards $108,000 for Bitcoin. Huge price appreciation in a short window of time. Again, very similar to what we saw back here during this window of time between February post the ETF launch from 42K all the way up here to $73,000. Exact same kind of trend here. And what we're seeing, just like last time, is a break of that 21-day, a clear breakaway of trend structure. And in fact, this time around, we're actually seeing a lot more weakness on the trend than what we saw back in around January to March of 2024, right? So this is a really important thing to keep in mind here, that the 21-day, which used to be acting as support ever since back in late October, is now acting as resistance very clearly here, not to mention the big even level of $100,000 acting as resistance as a sell point. That is not good. We should be seeing those big even levels being support when we clear through them if we want to maintain the bullish trend. And it's very clear here, if we just take a look at our moving averages, that if we essentially are treating the 21-day as resistance, we're looking for our next major moving average pairing as potential support. And the earliest, that we're going to probably reach there is probably the 100-day, which is down here at around $85,000. And that's the EMA here, which is moving faster. It could very well be somewhere in this pocket. So somewhere in the low $80,000 range. If that doesn't hold, then we're likely moving to the 200-day, which is down at around $76,000. Now, this will probably move up over time. I'm not trying to be too melodramatic. I'm not saying that this is the end of the world here, but I am saying that this is a pretty significant correction where we could be seeing from a top to bottom analysis probably a 25 to 30% pullback, right? Somewhere in this ballpark here, right? So that's not something that would be the end of the world, but it's going to mean a pretty bad situation for altcoins, right? The last thing I want to talk about price here, and then I want to explain why this is happening, is the prior line of historic resistance made up of the two prior highs in the last cycle. If this level is not held as support, that very much makes the case that we're likely coming into these moving averages here, that this is very well likely a short-term deviation, trapping a lot of traders who bought in here on leverage over the last couple of months. It would be the perfect trap for exchanges to liquidate people, for people who have overexposed themselves, i.e. companies like Microstrategy, to be put in a tighter position and essentially be in a state of higher rates of capitulation that could allow for a lot of those traders to have to be forced out of positions either through their stop losses or through getting liquidated by being over leveraged in the market, to essentially allow for a major flush out here and for a lot of people to see a big loss of capital. That is a really big concern of mine right here when it comes to the price analysis. But I want to talk about why we're also seeing this weakening in price. There's a couple important dynamics to talk about. At the end of the day, people talk about manipulation. People talk about manipulation to the upside. They talk about it to the downside. But the big thing above all, guys, is that markets are a game of inflows and outflows. You've probably heard me echo that point over the last couple of years if you stuck with me here in the dYdX channel and really ignored a lot of the noise out there and try to focus on the signal of what markets are telling you. Price action lets you know at the end of the day whether there are more market buyers or more market sellers. And that is really the ultimate question at the end of the day. Are there more people who are willing to clear through the asks on the order book? Are there more buyers willing to pay a premium from the existing market price of Bitcoin? Or are there more people willing to sell versus potential buyers or bids on the order book? That is what leads to trend direction and price. If we take a look here at what we saw back in December, I would still say above all that the numbers are not terrible by any means. We still saw around 100, more than 100,000, coming to as close to about 106,000 Bitcoin. If you also include Marathon as well, essentially speaking, probably 110,000 Bitcoin being swallowed up by institutional players through either the ETF, through miners that are also doing accumulation strategies like Marathon, or Microstrategy, which is still buying up a pretty substantial amount of Bitcoin. This is still the second largest month we have on record here for Microstrategy purchases throughout the past year. So it's not the end of the world, right? Things are still looking pretty good here on the demand side. But if you consider that essentially we've seen the price action we've seen over the past month, here from December 17th, the last 2 weeks really, but even just going back here to the beginning of the month, right? And essentially Bitcoin is still down for the month by about $3,000. Or let's just even say, let's be fair here. Let's say it's neutral, right? We have a neutral month and MicroStrategy and the ETFs and Marathon and a whole range of other corporate treasurers have bought well over 100,000 Bitcoin in a month. What does that tell you about the buy and sell side equation here? It tells me that there's a lot of sell side pressure here at $100,000, at 6 figures. And the fact is that a lot of this buy side demand, the majority over the last 2 months, has come from one single entity. That is MicroStrategy. It's not coming from institutions buying the ETFs particularly. That has been declining since back in October, right? Still a great number, right? Still a lot of demand. Not here to badger on, not trying to be negative. I'm just trying to point out the reality here, which is that price action is clearly showing that we need a lot more buy-side liquidity here. And that's a big point I've always brought up here in this channel, guys, which is that at the end of the day, as markets grow larger and larger, the demand for inflows grows larger and larger as well. And if we really consider this, right, while these ETF flows are not bad, and obviously MicroStrategy coming in and buying some as well, obviously this is great. The problem is that it's nowhere near enough to face the already existing 20 million Bitcoin out there in circulation that could very well be sold at any minute for people who essentially want to get the best available market price, right? I'm not saying everyone is dumping. I'm just saying here price action isn't lying. It's letting us know here that there's been some short-term exhaustion, and the things that were previously acting as support are now acting as resistance. This is something that is imperative to understand. And another dynamic that plays into this, especially as we're talking about MicroStrategy becoming this big kind of silo, set of demand for Bitcoin, right? This is really what markets are betting on here, is that MicroStrategy is going to keep buying more Bitcoin. We need to understand how they can afford to keep buying Bitcoin. And that is the MicroStrategy premium, which so far has declined significantly since back in mid-November. For about a month and a half here, we have seen the premium decline by a whopping 40% here during this window of time, 40%. So what I want to emphasize by this is that if there is any convertible note offerings, that is if MicroStrategy can get people who are interested still in this offering, this kind of game of musical chairs, that MicroStrategy's price is going to keep going up, Bitcoin's going to keep going up, therefore take these convertible notes that are going to pay you no interest, and the only way you're really going to be making money is if the share price of MicroStrategy goes up a certain amount, then you can essentially activate it at the strike price from those convertible notes and then be able to make a nice profit, right? We talked about that in a prior video. If you guys wanted to learn about that, I definitely recommend you check it out. I did a video on kind of basically how Bitcoin's price is essentially forming over time, and it's due to what's really driving the price, and it's mainly this kind of game of musical chairs from Microstrategy. It's not Ponzi or anything like that, but there are going to be people who are left empty-handed, or at a minimum, people are going to stop taking the offer, right? And that is going to diminish the Microstrategy premium here. It is going to diminish the amount of Bitcoin that Microstrategy can purchase from issuing new shares and diluting its base, and that is going to effectively reduce the demand for Bitcoin. And I want to talk about how important this is right now, guys, because while I know everyone out there likes to buy into narratives, if you take a good look around all of the companies and corporations, the people are saying, oh, there's talks that Microsoft or Amazon are going to go out there and buy Bitcoin. Well, if you take a look, none of them did it. None of them went out and bought it. MicroStrategy is in a league of its own. It is a kind of pseudo-speculative Bitcoin ETF. It has been that for the last few years. And we can see right now that its share price is trading still, even from its prior highs, at 420% premium from where it started when it started its Bitcoin treasury strategy in August of 2020. It is still up 225%, well above the 2021 highs here, both from here in February and June of 2021. So I'm not saying that this has to collapse. I'm just letting you all know here that if MicroStrategy is already exhausting itself at this point to buy as much Bitcoin as possible and it's not able to hold it up, that could be a big sign of concern here. How much do we really need to sustain these prices here, right? It is very important to keep that in mind, guys. We have to ask the question about what are the existing holders doing now? Is sentiment still there? Are the hodlers still holding out? Now, this leads me to talking obviously about what's going on in the broader altcoin market as well. I want to go ahead and talk a little bit about altcoins and some of our trends that we're watching, some different plays. But we have already corrected from those relative highs at around a valuation of $3.75 trillion down to 3.2. So we've already wiped out a whopping 500 billion plus in market capitalization. And it looks like we could still very well be in to continue correcting. I think that at a minimum, you are going to see a retest of that 100-day. It's not crazy to say that. We saw it in 2 days from the 21-day moving average back here in April of 2024. We went from around 2.5 trillion to 2.1 trillion, right, in a matter of just 2 days, right? And that would essentially lead us down to a market cap around $2.8 trillion, or essentially put us back to where we were here in early November. Again, not here to say it's the end of the world just yet, but at least in the short term, that's a cause for concern. We will again be obviously emphasizing as well the long-term concerns, right? What if we can't find support on the 100-day? What if we can't find support on the 200-day moving average? I would think that that spells very bad news for crypto markets. And again, we'll talk about that more in the macro section. But we can see here as well, we're really focused on altcoins. We want to find those plays where we can put, even fraction amounts of capital or, decent position of our free and open capital to trade into plays that could give us a 2, 3, 5, 10x return, right? In the meme coin space and all these different emerging narratives in crypto. Well, right now, since back here in December 7th, altcoin dominance has dropped significantly. We're down about 2 percentage points from those prior highs back in December. And along with that, we're now trading the 21-day as well as the 200-week EMA and the 200-week SMA as resistance. Not very good looking, guys. Having the simple moving average 200-week acting as resistance first, not a good thing. Breaking support on the 21-day and the 200-week EMA, not a good look. And now those are acting as resistance. Chances are you're going to probably get a low retest here in the 9% range at a minimum. And with a Bitcoin correction going down another 10, 15, 20% from here, and altcoins following and faring worse off, this means that we're going to see much lower prices here for altcoins. Or at a minimum, see some levels that we saw back here on December 20th when dominance was at that lower range. So definitely keep that in mind here. And I want you to also keep in mind another dynamic here, which is dollar dominance. Now, as this starts to get to really extreme levels, like upper single-digit territory, double-digit territory, that actually might spell good news because that might mean that we're getting towards the end of capitulation. There might be some great buy-the-dip opportunities. But essentially what this is measuring here is the market share of USDT or Tether and USDC or USDC coin. These are USD coin, which are the two major stable coins in the crypto space. And as this starts to move up here, this is starting to signal that the risk-on sentiment is starting to decay, that the premium people are willing to pay for altcoins is going down, or stablecoin dominance the stablecoin liquidity here is not increasing fast enough to be able to continue sustaining that continued upside movement in the market. And that essentially means that valuations are likely contracting. We saw basically a double top here in USDT and USDC dominance at 5%, similar to where we were back here in March. And as you all saw, when we broke that 21-day, right, this is again where all the fun was, from February of 2024 here to March. Or for example, when we broke the 21-day here on October 2023, going into January 2024. Those are the periods of time where you want to be in the market. When this thing starts to move up, I know it sounds kind of counterintuitive here, it's usually a bad sign. It's a sign here that valuation premiums are going down, right? People are flocking back to cash, right? And essentially that we've got a ways to go before the trend is going to start going back to the upside, especially if we can't hold on that 100-day moving average over the next couple of weeks. That is a very critical thing to keep an eye on. So make sure you watch this USDT.D plus USDC.D. This is a combination, it's a custom index that you can do within TradingView. But the main thing I want to just show here, guys, is we just take a look across the board in the market. All the things we talked about avoiding, right? Staying away from, not getting caught in the trap, right? XRP here, continuing to bleed out against Bitcoin, right? Down about 800 sats here from the recent prior highs, right? Close to a 33% correction here already from that prior high range, right? So this looks like it's going to continue going down here. The 200 week is all the way down here. That's a 40% correction. The 100-day, 200-day, looking at a 50 to 60% plus correction from here. The fact that we were unable to hold in this 21-day, we hit the 100 EMA, 100-month EMA. This looks way overbought. Stay away from this, right? XLM as well, same exact situation. It's already fared off a lot worse though. 21 days has consistently been resistance, easily avoidable, right? And it looks like we're easily coming into these moving averages here. You can try to find some buy the dip opportunities there, but I would wait until you get deep into those moving averages. Again, just would not be touching it here at these valuations. A lot of people unfortunately getting trapped. Solana as well. I know a lot of people are obviously bullish on Solana as this kind of the Ethereum of this cycle. I have to tell you guys, I think it's had its moment in the past. We can see very clearly here against Bitcoin. It's been facing resistance at the 21 days since November 25th. So it's been over a month now. Until that starts to change, I wouldn't touch it. I think you're going to get an opportunity here where Solana comes down here to the 200 week. Maybe you find a good entry opportunity there. That would be at least a substantial enough discount from the prior all-time highs back in March, whereby I would think, there might be a good risk reward setup here. We could have a relatively decent stop loss and maybe look for some entry opportunities. But the big thing above all that I'm seeing, right, is that across a lot of different altcoin pairs, you are not finding much strength here. So my point here is to keep in mind that a lot of altcoins out there are probably going to go down another 15, 20, 25% from here on out. And that's going to knock out a lot of people. It's going to knock people out of their stop losses. It's going to leave people buying heavy bags basically, and they're going to be wondering whether or not they should hold on to it. I would wait until we get greater signs of capitulation in the market before we really start finding entry opportunities. Now, the one thing I wanted to point out here that is getting me at least a little bit excited is the resilience we are seeing in some factions or parts of the altcoin market. And mainly what I'm seeing is a return to the legacy plays and mainly a lot of net legacy narratives. So obviously Ethereum is starting to showcase at least some signs of optimism here. Basically about 2 months here, basically the months of November and December, where price action against Bitcoin has remained neutral, right? So that's favorable for Ethereum. That's a big shift from the general trend we've had, which is generally going down here for the greater part of the last couple of years. A overall 64% correction from top to bottom from the December 2021 highs down here to November 2024, nearly 3 years here. And if we can start to clear through that 100-day moving average, which we really haven't been able to do in a big way, where we have a weekly close above there, that's where I could start to get really excited about Ethereum as a play here, as we're especially retesting the 21-day here. So keep an eye on that. But the other big thing that I want to put your kind of attention towards here is what's going on in DeFi. Now, I understand DeFi is not the hot, sexy narrative. It is not meme coins. It is not dependent AI. It is not real-world assets. It's not agents or whatever narrative or straws pulled out of the hat, so to speak. But this is one that has a really interesting and strong fundamental narrative behind it, and set of use cases, and strong actual revenue generating capabilities that actually this kind of diamond in the rough narrative could make a big comeback over the next couple of months, especially with the changes in the regulatory environment. I don't see changes in regulations really helping meme coins. I don't see it helping DePIN and AI. I do really see the change in regulatory regime in the United States potentially helping a lot of DeFi protocols being able to innovate again, being able to push the boundaries, being able to integrate with traditional finance in a deeper way. And if I take a look at AAVE against BTC, this chart is definitely exciting to me, right? As the 21-day is still holding here, and we're pressing against the 200-week, this looks to me like a lot more optimistic than most altcoin pairs out there. So I'm not trying to be all doom and gloom here, right? I am looking for those kind of opportunities where strength is showing in the market. And I'd much rather pay a premium on a play that's showcasing strength during pullbacks than finding plays that are down the most in the market, down 50, 60, 70% against Bitcoin. I want to buy into strength here. So to see this is really exciting. Along with that as well, Uni as well, while obviously not as optimistic and holding as much of its gains as AAVE, still basically where it was against Bitcoin all the way back since May of 2022, or here in June of 2023, or here in October of 2023. Still much higher from where it was back here in early November. And I think, again, that this is the market starting to reprice some of these plays for benefiting in an environment where finally the token holders of Uniswap or AAVE could really start to benefit much greatly. Again, at the end of the day, it's still down below the 21-day here, but we're holding on those long-term moving averages. That is a big shift from what we've seen before. Another one as well that I think you guys should keep on your radar is dYdX. Now, dYdX is one of our partners here on the channel. dYdX is a long-standing derivatives and decentralized exchange protocol in the crypto space. And again, similar to Uniswap, starting to showcase here at a minimum a clear sideways trend here against Bitcoin. Finally, we're starting to see some of these DeFi plays keeping up pace with Bitcoin and showcasing the signs of potential trend reversal with clear relative highs for the last year, but along with that as well, being able to start establishing higher lows here. This is the initial sign of a trend reversal here that we want to look for. Now for me, I would really like to see it clear through the 200-day moving average. This also, again, something we saw within Uniswap here, and also along with that as well for AAVE. Once that started to happen, we started to treat the 200-day more as support rather than resistance, then that's when things started to get interesting. But above all, it's keeping an eye on these different DeFi protocols and their developments. And the one thing I wanted to bring your attention towards is some of the big updates that have come for dYdX when it came to their recent launch of dYdX Unlimited. Now, dYdX Unlimited is one of the biggest updates that came to the protocol throughout the past couple of years. I've been following it. I've been kind of toying around testing with dYdX since back in 2020. I used to mess around with all kinds of different DeFi protocols back in 2019, 2020, and dYdX has really stood the test of time. A lot have come and gone. And the recent launch of Unlimited and some of the new technologies like Megavault have left me really impressed and really excited about DeFi again. So for those who don't know, the Megavault is a way where you can essentially provide liquidity across all of the different spot and leverage pairs within the overall dYdX exchange. So you can see here that essentially there are 161 holdings currently for the massive $79.5 million position within the Megavault. This is, again, people who are possibly putting in a couple $100, people who are putting in millions of dollars, essentially being able to act as effective market makers for all these different pairings. And the cool thing about that is that the pool has already generated over $3 million. The APR right now is 38%. What you're effectively doing is servicing as a market maker here within the dYdX market. And essentially it allows for this growing pool or liquidity of Vortex that just continues to grow over time, and essentially make dYdX a more powerful decentralized exchange, but also give people a really great way to earn APR in a safe way within the market. So it's a really exciting thing. I've seen nothing like this in DeFi. There are lots of vaults and yield farming things. This one is actually focused on generating real APR here, and I think it's definitely something you guys should be keeping on your radar. But beyond that as well, there's also a really cool feature of launchable or instant launchable markets, or instant listings that essentially allow you to be able to be the first kind of market maker or liquidity provider for a whole range of different pairs directly from within dYdX. And there's a ton of different markets that can be launched within an instant here on the protocol without requesting permission, without waiting around. And you can essentially be one of the first people to provide such liquidity. There have been a couple plays here like Thena. This was an altcoin that was really doing a lot of moves over the last couple of weeks and months. And Thena here is now listed on the exchange. So you can start to get access to some of these plays here within the market. And liquidity builds up over time here, which will essentially allow you to trade in a whole range of different altcoins as time progresses versus waiting around for centralized exchange listings. I think it's a great way to not only help the exchange generate more revenue, but outside of that as well, it's going to allow you to be able to get earlier access to some of these plays versus waiting around for the big SEX listings like Binance or Coinbase. So keep that in mind. If you guys are interested, take a look into what has been launched with the dYdX Unlimited Era update. And outside of that as well, if you want to dive into the documentation around dYdX Unlimited, you can find that as well within the docs section on their community tab. So I definitely recommend you guys dive into that. Another project that you should keep on your radar, one of our other partners here in this channel, has to do with the narrative of lending and borrowing. So as you all know, we just talked about DeFi being a really big emerging category here. We're seeing it in the price action, right? You don't need to really convince you of that. But the big thing above all is that right now, DeFi lending and borrowing tokens, mainly made up of AAVE, Maker, and Compound, are a fraction of the market cap they used to be, and comparative to their fundamentals, have one of the best TVL protocol fee generating structures versus their valuation, right? So they have some of the strongest fundamentals. If we were to kind of use traditional benchmarks like we would for companies, these projects are still some of the titans of the industry, yet they are trading at very moderate valuations versus a lot of different plays in the market. And that's why I definitely recommend you not only keep an eye on AAVE, as we talked about earlier, as well as decentralized exchange plays like Uniswap. They're still generating a great amount of fees and have the ability to eventually turn on a protocol fee, considering their market share in the market and the changing regulation environment. But outside of that as well, I definitely recommend you guys keep an eye on Elys Network. Elys Network is one of our partners here in this channel, and they're also focused on really disrupting DeFi by becoming a multi-service DeFi application and also providing multi-chain support, servicing a whole range of different networks. So essentially, as we've talked about here, Elys Network is tapped into the Cosmos ecosystem and will leverage a whole range of other different ecosystems, providing essentially the ability to swap simply the beautiful user interface here across a variety of different market pairs. But a lot of this will have the ability to earn through simple staking or liquid mining, where you can provide liquidity mining for a whole range of different pairs out there in the market. But outside of that as well, you also have perpetuals, which is going to allow people to essentially trade perpetual contracts or essentially be able to trade on leverage. So this essentially is becoming a vortex of services within the DeFi industry. And I think that overall, Elys Network being able to do this is really exciting. But outside of that as well, there's also the mainnet airdrop campaign, or a market incentivized campaign that's going on right now. So essentially, if you guys haven't checked this out already, I definitely recommend you guys continue participating in this. This is a way where you can essentially earn points and be able to claim some of the airdrop from engaging in various different activities from within Elys Network. So you can do that obviously by swapping, trading the pairs that you already would be trading out there in the market, right? Pairs like Atom or Cosmos, as a whole range of different other plays, as well as liquidity mining and staking Elys. So these are ways where you essentially have to have some kind of stake in Elys or provide liquidity of some format in the different liquidity mining pairs that are available. But you can also just swap as well, as you would be if you're already going to be trading. You might as well use Elys in this case and be able to get some of those essentially airdrop or mining rewards from your activities. So definitely check out the link down below in the description. There's also an affiliation program where you can send your own referral link and refer people and collect fees from their activities within the Elys Network. So definitely check all that out down below in the description if you guys are interested to learn more. But I think above all, it's definitely something to keep on your radar, one of the emerging projects that I have on my radar at the moment. So we talked a lot about the kind of short-term concerns when it comes to crypto in the market. We're obviously still keeping open the idea that if things keep chugging along, there could be an opportunity to buy the dip in a lot of these plays and where we could look for that dip opportunity. But I want to talk about what has me really concerned, right? I'm not worried that Bitcoin could pull back a little bit. I'm not trying to be all doom and gloom. That's all within the realm of possibility. What we got to talk about here is something that I don't think a lot of people really have on the radar at the moment, because to be honest, times have been pretty good for the last year or two, and anyone who's really been bearish has been kind of pushed to the side. And I think that this is a period of time where bulls have gotten a little too euphoric and have stopped asking the big questions, which is essentially, what is the real risk of recession? A real risk of a market correction, not just in crypto, a moderate correction, but I'm talking about a full 40-50% correction in Bitcoin, a sizable correction in equities, a real recessionary pullback. Are we at any risk of that? Now, I'm not saying it needs to be a housing market crash. It doesn't have to be as dramatic as the dot-com bubble. But I will say that the line of resistance we've been talking about for the last year or so, right, that's made up of the prior highs of the dot-com bubble and the prior highs of 1929, the roaring 20s, nearly 95 years ago, is starting to act a little bit more like resistance. What looked like a clear breakthrough is looking like a short-term deviation. And we have now gone back below that line of resistance, and it's starting to act as resistance again. The 21-day, not our friend anymore, not acting as support. And if we take a look at the, for example, 100-day and 200-day, which is usually our kind of buy the dip range, that's usually where buyers will come in and provide bid side support and continue pushing prices higher. If that doesn't hold, the 200 week is all the way down at 4,500 points. Now that will be moving up over time, but that can mean very well that a lot of the phenomenal gains we saw in 2024, right? We saw from the beginning of the year, right? We're still up about 27%. We're up a total about 30% at the peak of this rally throughout 2024. A lot of those gains could be essentially lost over the next couple of months. A lot of people could get sidelined, trapped in their positions. And I wouldn't be so surprised that that could play out here, considering the valuation multiple people are paying. Fundamentally, the market is way overbought historically, right? I don't need to be the one to tell you that. But at the same time, I understand, as people will echo a million times, markets can remain irrational longer than you can remain solvent, right? Trying to short the market. I'm not here to tell you to go short the market. What I'm here to say is that right now we're seeing some signs of exhaustion. For the last month and a half here, we've been pretty much neutral in the S&P 500, and it's coming up right here at historic resistance. When I take a look as well, there are a lot of different metrics that are sending big warning signs here about recessionary risk. And the biggest one is the 10-year to 2-year spread, the yield curve, right? And the uninversion of the yield curve back to the upside, the normalization of bond or treasury yields in markets. And guys, I'll just put it to you this way. When we were retesting the 100-month and 200-week back in the past, when we were starting to move up again, this was January 2001. This was November of 2007. When that acceleration really starts to ramp up, you're looking at a recession within a matter of anywhere from 3 to 6 months. This is a really damning sign for the trend of equities and assets as a whole. And I'm not saying that equities can't go up today or over the next week. I'm talking about the long-term perspective here and how we need to start getting a little bit prepared to perhaps maybe get a bit more comfortable with the cash position rather than being overtly all-in exposed to assets. So just keep that in mind here. We don't want to get trapped here, guys. There are going to be a lot of people, because they benefit from it, telling you that you have to be all in on markets, when in reality, it may very well be one of the worst times to feel the FOMO to get all into Bitcoin, piling all your capital in so you can buy a fraction or a whole Bitcoin or a couple of Bitcoin, only to see those Bitcoin drop and diminish in value quite substantially over the next couple of months, when you could have bought a lot more if you just held out, right? We got to really get out of the kind of hodl, constantly buy the dip mentality, because eventually the music stops. That same narrative that's been talked before, that it's never going to end, there's never going to be another dip or anything, that comes to ruin a lot of people. And even if we were to just revisit the prior highs of December 2021, the euphoric highs from COVID, right? That's about a 20% dip here in equities. From the prior highs, about 22%. That is totally within the realm of possibility. And it's going to wreck a lot of people if it plays out, because a lot of people are not prepared for that. A lot of people think because of AI, because of the lowering of interest rates, that essentially asset prices can't correct like that. Well, they most certainly can. I'll tell you that right now. And it can happen much faster than you may think. We saw that here back in January 2022, here to October, 27% pullback to the 200 week. And that 200 week is coming up right nicely in alignment here over the next quarter or two, here with those prior highs, or here with the lows of April. Totally within the realm of possibility. Yield curve uninversion playing out, resistance at 95-year-long resistance, ascending resistance, mind you. So we're giving room for the bulls to essentially continue pushing prices higher. Lots of wiggle room here. Clearly acting as resistance for about a month and a half. And, we also have the price of oil right now, still remaining below the 100-month since back in September. Over 4 months now. Oil moving lower, yield curve uninverting, S&P 500 seeing resistance, volatility showcasing some worrying signs here for the first time, back in the last couple of months. First serious uptick here, biggest one since back in August. Keep an eye on it, guys. I'm all for making money in the markets. I'm all for looking at buy the dip opportunities. The nice thing about that is we always approach things from a kind of medium risk, medium reward perspective. And we like to buy on dips. We don't buy into euphoria, right? Once we get those corrective opportunities, we can enter and we can watch to see how price is reacting. If we, essentially have our stops hit or we have to close at our positions, it's not the end of the world because we didn't buy at the all-time highs, right? And we take the loss or something. If it moves up, that's great. Then we can, make money and continue riding with the kind of up and to the right narrative where asset prices generally move in the long run. But we'll at least be protected from the worst case scenario, which could throw off a lot of people. It'll catch you off guard when you least expect it. So I rambled on a good amount here, guys. Keep an eye on that Bitcoin chart. Keep an eye on that line of resistance from the 2 prior highs in 2021, the peak of the last bull market. And keep open to the possibility that just like what we saw back here could repeat yet again. Could be multiple months of stagnation. Could be a more harsh correction. Or who knows? Maybe we reclaim that 21 day and I'm just blowing a lot of smoke here. I'm just here to look out for you guys as much as I can and hopefully share a more fruitful and more middle down the road opinion than what you're probably hearing from a lot of other people in the crypto space. I love crypto. I think there's a lot of exciting things about it. I definitely can see Bitcoin, maturing as this kind of financial instrument for people to be able to hedge against global currencies, other asset classes. But at the end of the day, it is still a risk-on asset. Altcoins absolutely are a risk-on asset. And we got to treat it like that, right? Doesn't mean we can't have some exposure to it. Doesn't mean you can't have like a hodl portfolio. But if you're more of an active trader like me, especially if we're talking altcoins, you got to be able to be disciplined enough to close your positions when it's favorable to do so. So thanks so much, guys, for tuning in as always. If you enjoyed this video, consider dropping a like. It's a great way to support the channel. And if you guys are interested, we're going to be dropping this month's edition of the Dash Report on February 1st. If you want to just set a reminder to set it for it then, that's cool. But you can also go ahead and set it for it now if you'd like. It'll be sent out around February 1st. We're going to be covering a whole range of different altcoin picks. We're going to be watching stock positions and the equity markets and a massive analysis on everything going on in all the markets we're covering, from crypto to stocks, commodities, and Forex, as we always do each and every month. We'll have our mid-month webinar later in the month where you guys can ask me questions. And you can, of course, join in on a whole range of different things like our alerts group and discussion group where you guys can get access to more content and material from our community. Thanks so much, guys, for tuning in as always. I hope you guys have a phenomenal rest of your day, and I'll see you guys right back here for the next update on Monday. Take care, everyone.